We had quite the week last week. The market rallied a ton from those lower levels. If you watched our midweek video, I did talk about a potential reversal around this range and a big rally off of that. I also posted one on Twitter as well once it started to go. This was the key line that we did bounce off of. This will be a quick recap. We did bounce off of it. If you go on the daily chart, this is the one, the channel that we were trading within. It goes all the way back up here and it connects to these pivots. So we did bounce straight off of that, made an inverse head and shoulder. You can see the left side, we have the head here, and then the right side, and then a big rally off of that, which we will have some more to go, especially this week, which I do want to talk about. In terms of this week, I do believe we have some more upside to go. However, it is not as much as you'd think. So we, like I said before, I expected this big gap fill. I did not expect it on Friday. I thought we'd have it like within the next week or so in the midweek recap. And we did have this big gap fill on Friday for a major bullish candle. This is very, very bullish. Next stop would be right here around 3,960. The reason I say that is because of this orange line converging with this prior channel. This was the lower end of the channel that we had been trading before. You can see the line goes all the way up to this pivot point over here, and it drags all the way down. We use this as a support many times, and this one has acted as a support along the way, so it will act as a resistance once we hit it. Also, the orange line I've referenced in a ton of our videos. If you haven't seen them, subscribe and you can check those out. But it goes all the way down to 2009, the lows there during the recession. And it also predicted the 2020 COVID crash. This is the same line off of which we fell. So this one is very crucial, and both of them converge together at 3,960. Now, typically when we have very big convergences like this, we tend to have a resistance intraday. However, it does not typically mean it is the top of kind of like our leg up. So we'll probably have some form of a rejection off of this intraday. So I'll go to the 15-minute chart here. However, I do believe there might be some more upside first. And the reason I say that, I'll get rid of this arrow here, kind of big. The reason I say that is because of this gap right over here. So we had this big gap down on June 10th, and we had two major gap downs in a row, which first of all means that it's very, very bearish. If you have two large gap downs in a row, that means things are starting to heat up towards the downside. There's a lot of downward force and a lot of selling pressure, which, by the way, means we're going to have some more selling in the future. However, it's not going to be within this month, in my opinion. I'll go over that in another weekly recap video in the future. But what I do want to say is we do have this gap here. So we filled the first one. Now bulls are starting to feel really, really confident. We had a majorly bullish close after filling the gap, and now we're kind of starting to look at this new one. However, like I said, 3,960 is a very solid resistance. I expect some form of a fake out to the upside. Maybe we go the middle of this gap right here, and I expect them to bait a lot of bulls in during this gap and then reject it back down maybe to like 3,800s, and then eventually we go back up and fill this gap. However, I don't think the first try of filling this gap here is going to be the one that actually does it. Could it happen? Yes, but my opinion is we won't see that. Now, we had a very similar situation over here during the FOMC meeting. We had the big spike up over here, and you can see we kind of started to fill the gap. Maybe bulls started to get into this with zero-day expiration calls or short-term calls, and then it fell straight back down and gapped down. So this is a big fake out in this gap that faked a lot of people out. I expect something similar, maybe not as large in regard, but something similar all the way over here for this gap fill. So do watch out for that. And again, a lot of people, I've seen it in the Discord chat as well, a lot of people are starting to get really antsy to start to go short as well. There's some really aggressive bulls right now, but a ton of aggressive bears. And one of the reasons why some people really want to short is because of all of these puts that we're seeing coming into the application on Cheddar Flow right now. So you can see here we have the 1 million, two of these 1 million premium prints for the 371 strike. This is very far out of the money and very bearish. We have another one right here for 5.1 million for 370. And this one is a bit of a further expiration, which is 916. The very interesting part that I've seen so far during this big rally is that a lot of these puts that we saw before were with the 715 expiration, kind of like these that came in after hours, we're starting to see a switch for August and September expirations, which if you remember from last time, once they switched from the June expiration to July expiration, that is when we had this large downward move. However, it happened way after they started switching that. So once they gave up on June 17th, which was the prior UpX, we had to wait a while and consolidate a while, kind of like over here, and then we fell much later. And I expect that July is actually going to be relatively safe in terms of a new low not breaking. I don't expect this low to break within this month of July, at least convincingly. I expect it to stay above it for the rest of the summer, in my opinion. And I will trade with that kind of bias towards the low not going out. And the reason I said is, one, these puts are starting to have to get pushed back a ton. They're realizing, hey, this thing's getting really bullish. We need to add more time. We do believe it's going to go a lot lower, which I do as well in the future. However, it may not happen within this next month here. We need to add some more time for that expiration. That's what they're doing right there. We're seeing a ton of these, another 916 for the 365 strike. And you can see here, a lot of these are becoming September and August and September puts on here. So they're starting to have to push back these. We're still seeing some of these 715 ones. However, way more of these with a lot of premium are these August ones and September. So that's one thing you need to know. And also, if you do want to go short, I'm not going to tell you what to do, but you do have to be very cautious right now because this is a very, very bullish setup on the charts. This is not something you want to get caught short in when it's starting to rally big. You can get hurt really bad in this market, especially during these bear market rallies, and this thing can go way higher than anybody expects. Again, like I said, we could go up to the middle of this gap, potentially pull back a little bit back into like the 3,800s, and this thing could rip all the way up to here, like 4,150, 4,200, top of this line that I had here. This is the key resistance that we're under right now, and we'd see where it is around this time, like 4,200, which is also a thick supply level. So you have to be very careful right now. I would not want to be swinging short for a long amount of time. I'll only be day trading short as of now. All of my stuff that I'll hold overnight will be longs that I catch during dips if we get any. So that's just my bias right now. Just use me as an indicator, do as you wish. But yeah, this thing can start to get going, and it does look really bullish right now. One other thing I want to talk about, and I did a kind of like a clip on Twitter for you guys, is Meta. This setup is so bullish. We did load in the Discord on the exact low of day that we had all the way down here. And my reasoning behind that was, one, if you look here on the daily chart, during the 2018 correction and 2020 correction, we have a trend line that goes across. Look at where we were a few days ago, right on this trend line, literally. So we went a little bit below, kind of caught a lot of bears into it. A lot of people were getting angry as well that it was selling off so hard after we added the position as it was going down. However, that was the last day of selling, and that kind of was an indicator to me when people are starting to get really pissed off that things are falling down and things are selling off. That's kind of an indicator to me that, hey, this thing could start to turn around, and that's exactly what happened. We had 2 big green days. This is a massive green day. 7% on Meta is just insane for this stock. So very, very bullish right now, and the bulls want to see a weekly close back in this downward wedge. That'd be very bullish considering we fell below it. So this baited a ton of bears, and now this thing can start to fly. Along with that, we had $2.8 billion worth of dark pool prints come in and hit the tape. 1 billion here together, and then as you go down, we just had way more throughout the day. So a lot of these around the 170.16 level that came in after hours. These people could be loading for a potential long position. That is a lot of premium for Meta. So do watch this one. This one could be one of the strongest stocks during this rally, just based on how it's faring right now. So do watch this, and it could be an ideal trade setup, whether you want to do intraday or if you find good swing risk reward in the future. But otherwise, I do appreciate you guys watching this video. Enjoy your trading week, and I'll see you guys in the midweek video.